Happy New Year, guys. I hope you're having a great start of the year. So sorry I couldn't put out a content last week because of the new year. So I was so excited about the new year, so I couldn't make a content. But I'm here today, back at it, and today we'll be taking a look at a few charts for the week ahead. So just so you know, this week I wouldn't be touching currency pairs. I won't be trading currency pairs. And in this video, I'm going to explain the reason why I think you should stay away from currency pairs this week. Okay, but nevertheless, I'm going to take a look at a few charts. So we're going to be talking about commodities like gold, natural gas. We're going to be taking a look at crude oil and Nasdaq. So these are the major assets or commodities I'll be focusing on this week, and I'm going to share with you why I think we have to stay away from currency pairs this week. So just follow along. If you love the content, please smash the like button, subscribe, and leave a comment on your thoughts. Okay, so let me know what you think about this week's analysis. So we'll be starting with gold. So this is a gold chart on a daily time frame. So as usual, I'm just going to talk quickly about what's going on gold, and we'll go down to the lower time frame to see if there are good trade opportunities. So this is a gold chart on the daily time frame. We have our bearish trend. All right, so we had a triple bottom reversal pattern which sent price higher. We broke this resistance level and we retested it, now having some sort of bullish momentum to the upside. So going on to the lower time frame, and before we go down to the lower time frame, this is also a good area of resistance. Okay, an area of value where I think we might see some bearish pressure coming. So this known as a supply zone right now, okay, because we're coming from bottom up. So this is a supply zone, so there's a good chance that there's going to be a ton of sellers in this level, sending price downward for a quick reversal. So I'm going to go down to the lower time frame so you can see clearly what's going on gold. So 2 weeks ago, we talked about how price could break through this area of resistance, and indeed we did breakouts, had a retest, had a massive move to the upside. So this chart looks a bit messy, so I'm going to get rid of a few lines just after I explain what I'm about to talk about now. So last week, something weird happened, okay, with fundamentals. So we had a good job report from the United States, which was supposed to send assets downwards, okay, which was supposed to send gold downwards, Nasdaq and so on, and it was supposed to make the US dollar bullish. But instead, we had something called a buy the rumor, sell the news event, which made the opposite happen in the market. Okay, so I couldn't take advantage of the NFP because everyone knew NFP was going to be solid, but price went in the opposite direction because smart money were involved. So I guess what smart money are. But that being said, we're going to take a look at what we might expect from gold next week. Okay, so this week, so to say. So this is a bullish trend. In my opinion, I think it's logical to look for opportunities to go long. Okay, so right now I wouldn't be shorting gold because there seems to be a ton of bullish momentum on gold. Even when other assets are tanking, gold seems to be strong. So right now, what I'm going to watch out for before I take a trade on gold is waiting for some sort of bearish reversal. Okay, maybe back to this area of value, consolidate a little, then grind upward. So I'm going to wait for some sort of pattern to go long around this area of value, aiming for this area of resistance right now. Okay, so we might also see a little pop into this area of resistance, a bit of a consolidation, and then a drop. Okay, then if we get a drop, I'm going to wait for a consolidation, giving me some sort of bullish pattern or a resistance breakout to trade in line with this bullish momentum. Okay, so the idea is waiting for price to come into this area of value before looking for an opportunity to go long on gold. So this is what I'll be watching out for gold. I have no intentions of shorting gold right now, and I'm just going to watch the charts to see what happens in order for me to take advantage of this bullish movement on gold. Okay, so remember, I trade with the trend, I follow the trend. I really don't like to trade against the trend because I will be trading against the market. The market is the ultimate referee. So there's no need to think about, outsmarting the market. Just follow simple rules and you're going to get the most out of your trades. So this is what I'm watching out for gold. I'm not going to be going short. I am only looking for opportunities to go long. Alternatively, if we do get a pop, so I'm just going to move this a little bit downward. So if we do get a pop, so let's say breaking through this resistance level, I'm going to wait for a consolidation above and a bullish breakout for me to go long. So I'm either going to go long above this area of resistance, or I'm going to wait for a quick reversal down to this area of value or close, a consolidation and a bullish breakout for me to aim for this higher price levels at this resistance level. So my stop loss is going to be just below this area of value. So my stop loss is going to be below here, because if we come down here, it means we are likely going to be breaking this trend line and maybe probably coming lower. And my take profit is just going to be around this area of value, okay, this resistance level. That's if I indeed get an opportunity to go long when we see those price reversals. That's if it indeed happens. So I'm not saying this is going to happen for sure, but this is just how I trade and what I'm going to be watching out for this week in order for me to take advantage of these price movements on gold. So that's it quickly for gold. Moving on, I'm going to be talking about crude oil. So crude oil, same thing with gold, bearish trend, okay. So you can see gold has a clear trend, okay, bullish trend. We just look for opportunities to go long. Crude oil has a clear trend, bearish trend, okay. We look for opportunities to go short. And coming down to the lower time frame, so right now this is a 6 hours time frame, going down to, let's say, the 2 hours time frame, we can see what's happening down here on crude oil. This looks like a classic setup for a sell trade opportunity, right? Because you can see we had a solid area of resistance here with multiple price reversal. Then we had this trend line with a consolidation. This like kind of like a bearish continuation pattern, okay, and we had a good breakout. So this breakout broke this support level, right? So I'm going to mark that out on the chart so you see exactly what I'm talking about. So it broke this level and we saw some price consolidation sending price lower to this area of value. So this is a support level right now because we seem to be consolidating around this level. So right now we can see after this bearish move, we are kind of having a bearish consolidation, some sort of bearish continuation chart pattern, okay. So this is kind of like a bearish flag. So all I'm going to do, okay, all I'm going to do is wait for a breakout from this level. So this bearish continuation pattern, which is a bearish flag, I'm going to wait for a breakout and then go short. So something like this. So I'm going to wait for price to break through this level with a good candle close, then I'm going to go short. So depending on how the market moves, I might wait for a small consolidation, or I might just go in. So I might go in at with a very little position, okay, at this price level. If we get a breakout, then if we get a small consolidation, then I'm going to scale in my other positions to ride the price as we go lower. And my first target is going to be these lows. So I'm going to target these lows, which will be approximately, let's see, the risk to reward ratio for this one isn't that great, but I think it's going to be worth it because this is just a classic, you know, sell setup, right? That's if it plays out as I expect. So I'm going to target 250 pips and my stop loss is going to be around these highs, okay? I know, yeah, bad risk to reward ratio, but it looks more realistic if we indeed get a breakout, okay, because there's a good chance we go lower. So even if we go 100 pips, then that will give me enough space or enough room to adjust my stop loss to my entry so I can run the trade risk free. So this is what I'm going to be watching out for crude oil. I am not going to go long. This is just a no-brainer, okay? You don't go long on this kind of setups. So you see bullish move, consolidation, breakout, breaking these lows, making a lower low, right? Bearish flag, a breakout, go low. Simple as that. You don't have to complicate things. So as for long position, I'm not going to be going long because the overall trend is in a bearish trend, right? So that's it quickly for crude oil. Moving on, I'm going to be talking about Nasdaq real quick. So Nasdaq, same thing, bearish trend, right? And we look for opportunities to go short. So we had these, I'm going to go down to the lower time frame. So we had a massive, you know, bullish move on Friday, okay, after the NFP. So we had an NFP release which was actually very bullish for the dollar, right? Because interest rates, unemployment rates declined and there was more job added to the economy. So I don't know what happened. Like I said earlier, I think it was a buy the rumor, said the news event, because everyone kind of knew the result was going to be bullish. So I think investors just, you know, took advantage of that liquidity coming to the market, and you know, we had this massive, you know, bullish move to the upside. So right now we seem to be having a bearish reversal from this area of value on Nasdaq, which could send price lower, right? So this could send price lower to these price levels, giving us a good opportunity for a sell position. So I'm going to watch out for a, you know, bearish reversal candlestick at this price level in order for me to go short on Nasdaq. So it might be a bearish engulfing candle. So this week I'm going to watch out for a bearish engulfing candle, or it might be a, you know, an inverted hammer, right? So whatever candlestick pattern signifying that there's a good chance we might reverse from this level, I'm going to go short, targeting the support level. Okay, so this is the base of the overall trend. Okay, so if we break this support level, it means we're making a lower low on Nasdaq. So that's just one way to look at this chart. So there's something else I would like to draw your attention to, which is, you know, taking these highs. Okay, so if you pull out this trend line, you know, some people or some traders would have gone long, right? So neglecting this resistance level. So I'm going to take this off for a minute. So if you take this trend line, right, you see we have 1, 2, 3 different, you know, bearish reversal off this trend line. So you can call it a valid trend line, right? So some people would like to have gone long here, but in this case I wouldn't be going long because obviously we have a resistance level, right? So this is a resistance level, which is a good there's a good chance that we might see a price reversal, and this will just turn to be a fake out from this level. But we could head higher, but I'm just trying to help you understand that there's a resistance level here that could possibly hold price or prevent price from going higher. So if you are going to be trading based on this trend line, also consider the support level, sorry, the resistance level, right? So something else to also mention is we have a double bottom here, and we have some sort of bullish momentum on the RSI. So this is not a divergence, so this is not a bullish divergence, because this low obviously is at the same low with this other low. So double bottom, but we have rising, you know, lows. So we have higher lows on the RSI showing strength, and at this resistance level we seem to be coming closer to the overbought level. So this is kind of like a complicated chart, but all you have to do is patience. Okay, so if we get a breakout above this support level, so let's say we get something like this, so if we get a breakout above this support level, sorry, above this resistance level, then a retest, then a bullish continuation, then this will be opportunity to go long. Yes, because we've broken through this area of value, which is a resistance level. So this would be my scenario to go long for Nasdaq. Other than this, I'm just going to wait for some sort of sign of a bearish reversal, and I'm going to go short, targeting these lows, because the fundamentals around, you know, the US economy right now is just not solid. Okay, I mean, it's not solid for assets like Nasdaq, right? So it's solid for the US dollar. So if the US dollar is bullish, Nasdaq goes bearish. Okay, so that's how they correlate when it comes to price movement. So that's it briefly for Nasdaq. Moving on, I'm going to talk about natural gas. Right, this is unusual. I really don't talk about these assets, but I trade them because, you know, most of the traders on this channel trade currency pairs. But I'm going to be talking about something briefly at the end of this video, so please watch to the end so you get some insight from what I have to say at the end of this video. So this is Nasdaq 1 hour time frame. I don't want to go too high. This is clearly a bearish trend, and what you can see is we had a massive bearish move. We had a bearish flag, okay, bearish continuation pattern. All you have to do is go short here and ride the price movement down. You might think this is a very small move, but if you use the price range tool, you would see that excuse me, this is actually a very good profit. So to this low, this is 300 pips, right? If you take a look at this breakout from here, this is also 300 pips. Take a look at this breakout from here, this is almost 400 pips. If you take a look at this breakout from here, you see this is 400 pips as well. So when you get a trend like this, all you have to do is trade in line with the trend. So this is natural gas 1 hour time frame, bearish continuation pattern. You go short, take profit, 200 pips, 100 pips, as the case may be. Wait for a consolidation. Take a it makes a support level. You trade the breakout, ride it, 200 pips, 300 pips. Wait for a consolidation. It gets a breakout. You ride it. A consolidation, breakout, you ride it. So this is simply how you follow trends. So I'm going to try as much as possible to make a separate video talking about how to follow trends, okay, how to take advantage of trends. So watch out for that. It might come this week, it might come next week, but just subscribe, turn on the bell notification, so whenever I drop that content, you're going to get alerted and you wouldn't miss that content. So right now we are having some sort of a bullish divergence, right? So you can see on a 1 hour time frame, you can see price made a lower low here on the natural gas, and we can see higher lows on the RSI. So this is very important because this means we might see some bullish momentum coming for natural gas. Okay, so In addition to the bullish divergence, you can see we had a bullish engulfing candle as well on the this support level, right? So this is a bullish engulfing candle, which means bullish momentum. So what I'm going to be watching out for this week for natural gas, I'm not saying you have to go long, right? I'm just saying you have to be patient. So I'm going to wait for some sort of bullish move, a consolidation, maybe giving us a good support level, and a breakout if we get a breakout. So this would help us trade in line with the trend. So at this price level, so if we get something like this, then this would invalidate this bullish divergence. Okay, so if we get something like this, this would invalidate this bullish divergence we have right now. But at the moment, there's a bullish divergence, which means there's a good chance we might see some significant bullish move on natural gas. So I wouldn't be going long yet, okay, because this is clearly still in a bearish trend. So I'm just going to watch out for something like this to go short in continuation of this bearish trend. So the only reason I'm going to go long, okay, the only scenario I'm going to go in which I'm going to go long is if we get a good breakout from these highs. So this would therefore lead to a break in market structure. So if we get something like this, I'm going to get rid of this right now. So if we get something like this, so let's say we creep slowly upwards and we consolidate a little around this level and we get a breakout followed by a retest and a bullish move, then I'm going to start thinking about going long, okay, trading in line with the new trend if this happens on Nasdaq. Okay, so this means this bearish trend on the 1 hour time frame might be coming to an end, and I'm just going to take advantage. But I don't think that's going to happen this week. It might happen. If it happens, I'm going to trade in line with the trend, with the new trend. But the best case scenario, in my opinion, is waiting for something like this. Okay, so waiting for a bullish move, a consolidation, and a bearish breakout. So this is what I'm going to be watching out for on Nasdaq in order for me to take advantage of this trend, right? Sorry, on natural gas. Yeah. So moving on, we're going to be talking about AUD-USD. Yes, I know I said I won't be trading AUD-USD this week. Sorry, I won't be trading currency pairs this week. So I'm just going to show you something and the reasons why I wouldn't be trading currencies, because currencies for the past 1 to 2 weeks have been a mess. Okay, I'm going to show you what I mean when we move on to EUR-USD and GBP-USD. So this is a 4-hour chart on AUD-USD, a bearish trend. Now we seem to be, rejected by this mini resistance level. Okay, so if you extend this, you can see this looks like an area of value. We had a bullish reversal, so support level turned resistance level, right? So if we go down to the lower time frame, let's say the 2 hours time frame, for example, you would see that we are currently, being rejected somehow by this resistance level. So the only scenario to go long for me is if we get a break above this, resistance level. So something like this. So if we get a breakout and a good consolidation above, then I'm just going to go long. Okay, because if you had traded AUD-USD last week, I think you would have got burnt so many times, because I don't know, these currency pairs these days, they just move so irrationally. Okay, so let's say, for example, you took this trend here and you got this good breakout. You can see it didn't even last a day. We had a massive bullish reversal to the upside. So you would have lost money here if you are not being conservative, because we did get a retest. So this is one. Then we went back into this resistance level, maybe thinking we're going to break through, but we reversed back to these, lows, right? So let's say, for example, you drew your trend line like this, thinking, okay, this was a consolidation. Okay, so show you something. So thinking this was a consolidation, and now you have had a breakout for you to go short. You can see immediately after the breakout, we went higher again. So this is just a no-brainer. Okay, this is not the kind of environment I like to trade in. I like to trade clean, clear trends like we had on crude oil, we had on gold, we had on Nasdaq, okay, and we had on natural gas. But you can see AUD-USD looks like a mess. So this is not the environment I like to trade in. That's why I will be staying away from currency pairs this week until I get a clear trend and I get a clear opportunity to take those trades. So moving on, EUR-USD. So same thing. You can see this is just crazy. Okay, so I'm going to show you something. So imagine I'm going to go down to the 2 hours time frame. So this is clearly visible. So this is the reason why I'm staying away from currency pairs this week, because it's been a crazy ride. Okay, it's just been crazy. So if you try to trade this market, I think you would have been burnt so many times. So let's say, for example, you try to, you know, trade EUR-USD, thinking, okay, now we've got a very good breakout, we had this retest, now you're going to go short. If you went short around this level, then you can see we had a massive reversal to the upside, and I know your stop loss would have probably been above this, you know, area of value. You would have gotten stopped out, right? Now we took out this low. Okay, we had a reversal, taking out this low, thinking now we are going to go lower, right? So you decide to take another short position. Short position was short-lived, right? We had a massive move to the upside. So how do you trade this kind of market? What I do is I simply just stay away. So there's no need to force the charts, right? There's no need to force your strategies on charts that looks as messy as we have it right now on EUR-USD. I can't even see an opportunity to go long or an opportunity to go short. So I might tell you, okay, go long when we break these highs, but there's a good chance we go above these highs and we get rejected. It's just crazy, right? So the reason is because we have, you know, fundamentals coming from euro, we have fundamentals coming for US dollar. So the two currency pairs, you know, the volatility with these currency pairs is just so much, and there's so many indecision in the market. That's why we have these crazy swings and crazy price movement. So it is logical to, you know, stay away from this kind of markets, wait for better opportunities before, you know, jumping back into, you know, trading currency pairs. So one last one, GBP-USD. So this is something I really thought I would have been able to trade. I actually lost a little bit of money on GBP-USD because I didn't take profit early. So this is what happened last week. So I'm going to go down to the 2 hours time frame, right? So you can see we had a very good breakout, right? So I didn't take profit because I thought we were going lower. I know I should have taken profit at these lows, but why? This was just a few pips, right? So I'm just going to use the price range too. So this was just a few pips from the breakout. So this was just about 80 pips. It's just not significant for me, right? So we had a reversal. Okay, I got stopped out at my, you know, entry level because I adjusted my my stop loss to break even, right? So we did come again, right? Had a good breakout. So we had this breakout, a consolidation, another breakout, right? So I didn't really take this trade, but if you did, right, excuse me, so if you did take this trade and you didn't take profit, you can see we came all the way down, reversed. So right now, how are you going to trade this market? So you could decide to, let's say, you know, trade a break of this resistance level, right? But we could get something like this. We could get a breakout and a reversal. So this is just a no-brainer, and it's best to stay away from this kind of market because this looks like a good bearish trend. Meanwhile, we are having a bullish trend. Excuse me. Meanwhile, we're having a bullish trend from this level because you can see these consolidations and these price movements here took out these lows, so creating lower lows. But this, excuse me, but this is still in a bullish trend, right? So this is just crazy, and I wouldn't be trading, I won't be taking that risk to trade currency pairs this week. That's why I will be focusing more on gold, crude oil, Nasdaq, natural gas, and that's it. So something else to pay attention to this week is that there's going to be a CPI report from the United States this week, I think on the 13th or on the 12th of this month. So pay attention to that. I think that's going to move the market significantly. And lastly, one piece of advice, guys. Even if you are a forex trader, I want you to understand that you are not limited to trading currency pairs, okay? You can trade gold, you can trade commodities like crude oil, okay? You can trade silver, you can trade indices like, you know, Nasdaq, the S&P 500, the Dow Jones. You can trade natural gas, guys. These are clean charts. You can see this is a very clean chart. You can take advantage of this price movement. So you don't have to stick with currency pairs just because you're a forex trader. Because I believe right now, almost all brokers offers, you know, a wide range of, you know, trading instruments. take advantage of charts that have a clean and clear direction with clean and clear breakout. You can see over the past 1 month, I've been able to take advantage of 1, 2, 3, 4. So 4 trade opportunities from natural gas over the last 30 days. And this is just a no-brainer, okay? Same thing with Nasdaq. I've been able to trade, you know, take sell trades like at this breakout here. Excuse me, at this breakout here. Good trade, right? At this resistance level. So you just know this is a clean trend. So you can see gold as well, a clean resistance level, a clean breakout retest move. So these assets tend to give you better risk to reward ratio, because you know when you get a good setup, a clean breakout, you have more confidence that the trade is going to go in your direction or in your favor, rather than, you know, trying to force trade opportunities into currency pairs like EUR-USD. I'm not saying EUR-USD or GBP-USD or other currency pairs is going to remain like this forever, but for now I think it's wise, it's best to trade in line with clean and clear trends rather than struggle with, you know, charts that are just not worth it right now. Okay, so that's it for me this week. If you enjoy the content, you love the video, please like, subscribe, leave your comments and your thoughts in the comment section. And just a quick reminder, our academy is going to be launching very soon, hopefully this week. We're trying as much as possible to work as fast as we can to make sure the academy goes live this week. And when it does, I'm going to make a video and I'm going to, you know, show you how it works and everything. I hope you enjoy the content. I'm going to see you next week, but within this week, I'm going to try as much as possible to, you know, put in maybe 1 or 2 more videos teaching you about how to follow trends. So that's it for me this week, guys. Have a wonderful week ahead.